In this video, we're going to apply activity-based costing to a manufacturing firm. There are two main costing systems, the traditional costing system, which we've already covered through job order costing, and the activity-based costing system. Let's review the traditional costing system first. Using the traditional costing system, we start by estimating the annual total overhead costs, the total dollars that organizations expect to spend during the year. We do this at the start of the year. We place all of these overhead costs into one cost pool. We then estimate the annual activity level, the cost driver that causes overhead costs to change. This could be direct labor hours, direct labor costs, machine hours, kilometers. Whatever cost drivers cause the majority of the costs in the cost pool to change is the cost driver we would choose. Using the one cost pool of estimated total annual overhead and the one estimated total annual activity, we calculate the predetermined overhead rate, also called the plant-wide rate. Remember, this rate is based on estimates made by management at the start of the year. Using the predetermined overhead rate, we multiply it by the actual activity used in each of the organization's jobs. The predetermined overhead rate multiplied by the actual activity used in the job, such as direct labor hours, allows us to allocate an appropriate amount of overhead to each job completed. Once we have the total overhead to apply to each job, we add it to the direct materials and direct labor cost to determine the total cost of each job. This is important because the total cost of each job is used to determine the selling price that will be charged to the customer. Now let's look at an activity-based costing system and see how it differs. Under the activity-based costing system, the company still estimates total annual overhead costs, but the total overhead estimated is divided into separate activity cost pools. In this case, we have three: activity 1, 2, and 3. Note that an activity-based costing system could have any number of activity cost pools, but I'm simplifying it for purposes of this demonstration. These activity cost pools recognize that many different activities are involved in the manufacturing process. Each activity cost pool represents the estimated overhead costs incurred for that specific activity. We then identify different activity bases, cost drivers, one for each activity. Each activity may have a totally different cost driver, and each cost driver is chosen because as the driver changes, the costs within that activity's cost pool change. We then calculate a different predetermined overhead rate for each activity by dividing the pool's estimated total overhead costs by the pool's estimated total cost driver. Each activity will have its own unique rate. To allocate overhead to each job, we first take the rate for activity 1 and multiply it by the actual activity consumed by each job. Therefore, activity 1's rate will be multiplied by the actual cost driver for job A, then by the actual cost driver for job B, and then the actual cost driver for job C. The total will be added to the cost of each individual job. This way, each job is recognizing the cost of using activity 1. Then we do the same for activity 2. To allocate overhead to each job, we take the rate for activity 2 and multiply it by the actual activity consumed by each job for activity 2. Activity 2's rates will be multiplied by the actual cost driver for job A, then the actual cost driver for job B, and the actual cost driver for job C. This total will again be added to the cost of each job, recognizing the cost of using activity 2 by each job. And we'll do this all over again for activity 3. Activity 3 rate will be multiplied by the actual cost driver for job A, then job B, then job C. The total cost of using activity 3 will then be added into each individual job, again recognizing the cost of using activity 3 by each job. Added all together, the cost of activity 1, 2, and 3 for each individual job equals the total overhead applied to each job. When we add the applied overhead to the direct materials and direct labor, we get the total cost of each job. This can then be used to determine the price that the organization should charge their customers. Let's compare the traditional cost system to the activity-based cost system using an example. In a previous video, we covered Julian Inc., a manufacturing company, using the traditional costing system. I'm just going to run through this example again to refresh your memory, or in case you didn't watch that video. Julian estimates that overhead for the year will be $864,000. They use a traditional costing system and estimate that the cost driver will be 100,000 direct labor hours. The company is bidding on job 480, and they estimate that for this job, the direct materials will be $44,000, direct labor will be $36,000, and total direct labor hours will be 2,400 direct labor hours. They want to determine the total cost of job 480. So that they can bid for the job. First, they calculate the predetermined overhead rate, also called the plant-wide rate, by dividing total estimated annual overhead costs by the total estimated annual activity base. 864,000 divided by 100,000 direct labor hours is equal to $8.64 per direct labor hour. Management then multiplies the predetermined overhead rate by the actual activity base expected to be used for job 480. $8.64 per direct labor hour multiplied by 2,400 direct labor hours is equal to $20,736. This is the overhead that is expected to be used in producing job 480. Management can now add the overhead costs to the direct materials of $44,000 and direct labor of $36,000 to determine the total cost of job 480. $44,000 plus $36,000 plus overhead of $20,736 is equal to a total cost of $100,736. The cost of job 480 can now be used to determine the price that they want to quote to their customer. Now, what if the company used the activity-based costing system instead? What would they have to do? Management would start with step 1, identifying and classifying all of the activities into separate cost pools. These would all be activities that are used to produce products. In a bake shop, for instance, this might be things like mixing, baking, and packaging, 3 different activities. In step 2, management would divide the total estimated overhead between all the different activity cost pools. It's important to note that the total overhead costs would not change between the traditional costing system and an activity-based costing system. Instead, management would take the total estimated overhead and simply divide it between each of the activities. Management would then identify each activity's base, each activity's cost driver. Cost driver would likely be different between each activity's cost pool. For example, in a bakery, the cost pool for mixing may have a base of direct labor hours, but baking, which is automated, may have machine hours, and packaging may have direct labor costs. Each base would be customized to reflect the cost within each activity's cost pool. And what causes those costs to change? Using the estimated overhead for each activity and the base for each activity, step 4 would be to calculate each activity's application rate. Step 5 would be to multiply each activity's application rate by the actual cost driver used in order to apply overhead to each job for all activities used during production. The total of all the overhead applied for each activity will determine the overhead to apply to each job. Let's apply these steps to the Julian example to demonstrate this. Again, Julian Inc. is a manufacturer of custom mining equipment. The company would like to set up an activity-based costing system. Step 1 is to identify and classify activities to create cost pools. And step 2 is to divide the total estimated manufacturing overhead between all activities identified. Julian has identified 3 activity cost pools and their estimated total overhead per activity. Material handling, $300,000. Machining, $540,000. Inspections, $24,000. Total estimated annual overhead is $864,000. Note that the estimated overhead for the year under activity-based costing is $864,000. This is identical under the traditional costing system, $864,000. The costing system does not change the total estimated costs. All it does is divide that estimated overhead into multiple cost pools, multiple activities when using activity-based costing. Total estimated overhead does not change. Step 3 is for management to determine each activity's total estimated cost base, or cost driver. Julian has also identified each activity's base. Material handling is number of parts, 100,000 estimated parts for the year. Machining is machine hours, 60,000 machine hours estimated for the year. Inspections is number of inspections, 12,000 estimated inspections per year. Now that we have each activity's base, we can move on to step 4, which is to calculate each activity's application rate. We do this by dividing the total estimated overhead cost for each activity by each activity's base or cost driver. We have the estimated overhead cost per activity and each activity's cost base here. So we'll create a chart to calculate the predetermined overhead rate for each activity. The chart has 5 columns: the name of the activity, the estimated annual overhead costs, the activity base or cost driver, the estimated annual activity, and the activity rate, which is what we're calculating. For material handling, the estimated annual overhead cost is $300,000. The activity base is the number of parts, and the estimated annual activity is 100,000 parts. To calculate the activity rate, we take the material handling estimated annual overhead and divide it by the estimated annual activity, which is $300,000 divided by 100,000 parts, so the activity rate is $3 per part. This is the predetermined rate that will be used for material handling. For machining, the estimated annual overhead is $540,000. The activity base is machine hours, and the estimated annual activity is 60,000 machine hours, denoted as MH. Using the same process, $540,000 divided by 60,000 machine hours is equal to $9 per machine hour, which is the activity rate for machining. For inspections, the estimated annual overhead cost is $24,000. The activity base is number of inspections, and the estimated annual activity is 12,000 inspections. Again, using the same process, $24,000 divided by 12,000 inspections is equal to $2 per inspection, which is the activity rate for inspections. Note again that the total estimated annual overhead is the same under both the traditional costing system and the activity-based costing system, $864,000. However, where the traditional costing system has one activity rate, the plant-wide rate, the activity-based costing system has multiple activity rates, one for each activity used in the production process. Now that we have each activity's application rate, we can move to step 5, multiply each activity's application rate by the actual used, or in this case, the estimate used in order to provide a quote. Apply overhead to each job. For Julian Inc., management estimated that job 480 would require 2,000 parts, 4,200 machine hours, and 120 inspections. With these estimates of the use of each activity, we can calculate the overhead applied for activity 1, material handling, the overhead applied for activity 2, machining, and the overhead applied for activity 3, inspections. That will give us the total overhead to apply to job 480. Using a new chart, we have columns for the activity's name, the activity rate, which we already calculated, the estimated activity usage, and then the overhead applied. Material handling has an application rate of $3 per part. Job 480 requires 2,000 parts. So $3 per part multiplied by 2,000 parts is equal to $6,000 of applied overhead for material handling. Machining has an application rate of $9 per machine hour and requires 4,200 machine hours. So $9 per machine hour multiplied by 4,200 machine hours is equal to $37,800 of applied overhead for job 480. Finally, inspections has an activity rate of $2 per inspection and requires 120 inspections. So $2 per inspection multiplied by 120 inspections is equal to $240 of applied overhead for job 480. The total estimated overhead for job 480 using activity-based costing is $6,000 for material handling, $37,800 for machining, and $240 for inspections, a total of $44,040 of overhead applied. If we add the direct materials of $44,000 and the direct labor of $36,000 and the overhead applied of $44,040, the total cost of job 480 is $124,040. That's under the activity-based costing system. Compare that to the total cost of job 480 under the traditional costing system, which is $100,736. Why is there a difference in the total cost of job 480 when two different costing systems are used? We can quickly see that the direct materials and the direct labor are identical. Makes sense. We need the same materials and labor to produce this product. But there is a difference of $23,304 between the overhead applied under the traditional costing system compared to the activity-based costing system. Why is there a difference in overhead applied between the two costing systems? It is not because the total estimated overhead for the year is different. We can see here that under the traditional costing system, it's $864,000 and $864,000 under the activity-based costing system. Total overhead is not changing between these two methods. That does not cause the difference in costs. So why the difference? By dividing the manufacturing overhead into activity cost pools and choosing cost drivers, different cost drivers, which reflect how costs change within each cost pool, we can calculate a better activity rate, which actually reflects the use of resources when producing a product or service. This results in more accurate allocation of overhead costs to each job based on usage of resources. With better costing, organizations can determine more accurate selling prices so that they can cover all their costs plus earn a profit. So, what are the benefits and drawbacks of an activity-based costing system? Well, that's a topic for a future video. As always, thanks so much for watching.